Hey, good day everybody. Sergeant Crypto here, Crypto Team 6. Hey, I'm going to do a trading lesson today. A lot of folks out there who buy and sell cryptocurrencies are the type that hold on for dear life. Others are those who would trade when the price goes lower. They try to catch a falling knife and they try to buy it cheap and expect it to go back up again. Well, I'm here to show you an example that I think is going to make you change your mind on holding on for dear life forever, and also for trying to catch cryptos that have gone to extreme highs and then catching them on lows without really knowing what the ramifications can be. Because you see, this can happen to any crypto. What we're looking at here is we're looking at the BitConnect coin. Now, many of you know BitConnect owns and has a lending platform. And if you don't know the backstory and you're just trading this chart, you really have no way of really knowing what goes on. And a lot of us as traders, we trade without really knowing the backstory. We trade these coins not having all the information. The only thing that we have is price and volume. Now, for the most part, the BitConnect coin is a coin that is traded on their exchange, and it's also traded on HitBTC, which is an external exchange. And so what you'll notice is the BitConnect coin, pretty much they had a trading bot or whatever it was. I have no idea. But they said they had a trading bot that would do their trading, and on that volatility they would pay their investors for loans. So without telling you the backstory here, I'm just going to show you what happens. Normally this trades, I'm looking at a daily chart. So this is the trading range pretty much every day. And you can see over here that there's not a lot of volume. Typically this thing trades, I don't know, it was in the $250, $260 range. For a while there it traded between $200 and $400 with some pretty mild trading. You know, as long as interest was being paid, people were getting paid, nobody had any issues. And it seems that when people were paid their interest, they reinvested in the coin, which dried up supply and drove up the price. Now, on occasion, you would see that the price would fall and people would jump in and they'd buy it again. And eventually it got pretty volatile. About the middle of December, it hit an all-time high of about 400 bucks, and then it came down. And I'm sure there were people in here that were buying it all the way down, knowing that it's BitConnect. It can't go down. It'll always come back. Well, they traded, and sure enough, the price went back up to about 400 bucks. Everything is great. Everybody's happy. Hip hip hooray. The wine was flowing. The champagne was flowing. Everything was good until it looks like about the first week in January. And then all of a sudden, the price fell. And like every other price fall, people were buying and buying and buying and buying. And today, look what happened. The price went from $200 all the way down to less than $50. It got down to $1. Oh, $10. $10. Now you have to ask yourself as a trader, when you're putting your capital out there and you're expecting to make profits, you have a tendency in the crypto markets to think that these prices will always come back. Now, this is BitConnect coin, and I'll tell you what happened now that everybody knows the backstory. Well, the BitConnect coin stopped paying interest today. They refunded everybody their money, and they said, you got to get your coins off of our exchange because we're closing in 5 days. Now, as a trader, you might think, wow, this is a great price. You might have jumped in here at 150 or 100 thinking this is just great, because a lot of times we trade in a bubble. We don't hear this stuff. We don't see this stuff. And this is why you have to stand firm on trading fundamentals. We never enter a trade when a coin hits a new low, thinking that it's going to go higher. We need fundamental proof that this coin is going to go higher. And what is that proof? That proof is often volume or a price spike or something to indicate that the trend has broken. We can't just blindly buy on these downward spikes, because sooner or later, boom, you might get this and it goes to zero. Now, you might think this is what happens in crypto, but I've been trading currencies, stocks, futures, commodities for about 25 years now, and I saw this exact same phenomenon in the tech bubble. Everybody was buying tech stocks. Techs were new. Everybody was buying them. They always went up. When they went down, they would eventually go up. And guess what? Right around the year 2000, the tech bubble burst. Everybody started selling, and most of the tech companies did what most currencies are ultimately going to do. Most of these cryptocurrencies are new issues. Many of them are less than a year or two old, and when their technology fails, you as a trader may not get the news until it's too late, and you're down here. So, let this be a lesson. Go back and look at this chart over and over and over. And when you get the inkling or the idea that you want to buy a coin because its price looks really, really good, and you want to jump in there, knowing and absolutely thinking that it's going to go higher, watch this video again, because sooner or later, boom, you're going to have this happen. Now, if you do happen to have a coin like this, and it is doing this type of phenomena, you're going to have to figure out, when do I sell this? You don't want to ride it all the way down. At some point, you may have to take a loss. And there are rules for when those losses should be taken. But that's for another video. I just want you to realize and understand that when you're trading crypto, nothing is for certain. And there are thousands of cryptos just like these that come down, they go up, they come down, and one day they may just do this and fall straight through. Boom. Now, what I'm seeing here is a little spike of green. So there are some bottom feeders in here that are buying this coin. And without some fundamental evidence that this is going to continue higher, time has to go by to make sure that this goes a little higher. If you're still holding the coin, this may be where you want to get out. What I'm going to call this is going to be a dead cat bounce. What's going to happen is this cat fell, boom, it hit the ground, it bounces, and now you're going to see it kind of tumble, 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 tumble. And chances are it's going to go to zero and never come back. Can it recover? Will it recover? How long do you think it's going to take to get back to 400? Well, this BCC coin, now that its exchange has closed, it no longer has any value. Nobody trades it. It was only used for lending purposes, and all the loans are dried up. My guess is it'll never go back to 400 bucks. Unless they can figure out how to resurrect this thing. Even then, that's a long shot. Ask yourself, is this a place where you want to put your money? Do you want to take a long shot here, even though it's cheap? Let me tell you this, even though it's cheap, at 40 bucks, 100% loss on $40 is the exact same as 100% loss on $400. When you lose all your money, regardless of where you lose it from 400 or 40 or 50, the result is the same. It's 100% loss. You see, coins don't do 10x on the way down. They only do 1x. In this case, this is 80% loss in value in one day. For a portfolio of any size, that's a killer. Sergeant Crypto here, out.